and myself.
Welcome to Trade Live with IG, everybody. It is Thursday, the 14th of August.
Yeah.
Middle of August.
Exciting.
Done.
Still not, maybe not just yet. We're still waiting on that potential correction. But Julian Wheeler, who's coming in today, our new guest, Trader Friends, says, don't wait any longer. He doesn't think it's coming.
Whatever. I'll leave for that one.
Trigger.
So yeah, there is beautiful London this morning. That's right, you can almost see those non-dom private jets leaving out of London City Airport. We can catch them live on camera as they go, because of course that's the big story of the morning. Apparently, only 25% of them are leaving, so it's fine. Rachel, get the taxes up more, come on.
Did you see some of the memes yesterday? Some of the, lots and lots of chatter about, planes being used, planes with non-doms, planes.
Being used for what?
Those non-doms like leaving. The Bitcoin advert. Have you seen the Coinbase ones as well?
No.
Oh, you haven't.
What are you talking about, Ange?
Oh my goodness me. Well, it's all linked to some reports that Rachel Reeves is having a horrible week.
Well, she's having a good morning this morning because UK GDP through the roof. We're going to come on to that shortly, along with what else is coming up on today's show.
Here we go. Right, so we've got overnight action with myself and Rich McDonald. And then we have a bit of an interlude, I think with Axel sometime this morning.
Axel's coming to join me at 8:15. So fast markets, we're going to have a little bit of technical chats.
Yeah, and then we've got myself and for the first time ever on Trade Live with IG, the partner at Shard Capital, Julian Wheeler, who is also an expert in US stocks.
Can't wait for that one. And how do you know Julian?
Julian, we go way back because the connection is Bill Blaney.
Ah,
yeah,
good.
who also used to be at Shard Capital.
Right, I'll come on to that in a minute. So then you've got Big Jack. Jack is back.
Jack. He's back to talk to us about what it's looking like in the coming week in terms of volatility and how to play that as we've got more earnings from consumer names in the US.
Sorry, what's going on at 9:10?
Man versus machine.
But are you the machine?
I'm the man.
Spartan Harris then.
He is the it. We are going to, Martin wants me to test his machine, his AI.
Right.
He's going to pit me against it.
Oh, it must be a bad week. Aaron's done a runner, is he?
Hey, Ron, where are you? Was he ill? Is he on a plane?
Holiday. He's on holiday. So there you go. Machine doesn't take a holiday.
No, that's right.
And then 9:35, what you got for us there?
So I'm very excited about this. We have the 5th and final episode with Ryan Grace, head of Crypto Tasty. For those of you that watched the previous episodes, this is the grand finale, where he is going to talk about all things related to why crypto matters now more than ever and the future of this new and developing asset.
Now, for people that have missed your crypto specials, what can they expect if they go back onto the website and they on the YouTube, and they look at decoding crypto? What are they going to learn?
So the best thing about this is you don't have to be an expert trader, friends. In fact, it takes you and handholds you right from the beginning. Episode 1 just tells you plainly, what is crypto? How is it built? Why is there so much interest in the space? And then we build it up, we ramp it up for you very slowly though. And we discuss, how it emerged, how it is developing, why you should be interested, even if you don't have a position in it or you do, how that space in terms of regulation is developing both in the US and here. And we end with today's episode telling you why it matters, why you need to sit up and pay attention, and how it is going to perhaps matter in the future.
Well, you've timed that well, because I think Bitcoin just hit all-time highs. Oh, no, sorry, it's come off.
Oh, dear.
Literally 20 minutes ago, Bitcoin was at all-time highs, 12,300. But I do notice it's turned around on the day now. 12,180. So let's go into that and more in overnight action.
Oh, yeah. Hey, trader friends, welcome back to Overnight Action. action. It's not just Bitcoin, Ethereum as well has been going great guns the last few weeks.
Well, you've done very, very, very well from that.
It's ahead of his impending trip up to Scotland, so his speech is starting to turn Scottish, more Scottish.
I'm going to sneeze now as well. So, yeah, do not let me forget iron ore, right? We need to talk about iron ore before 7:50 a.m. But I did mention already the UK GDP this morning, and there it is, smashed it out of the park. Go on, Rachel. The quarter-on-quarter number, 0.3% versus 0.1 expected. The year-on-year also beat. The month-on-month for June also beat. And it's all good news.
Lots of people waking up to this thinking, especially if you're a business owner, you're probably thinking, doesn't feel that way if you're running a business, and especially if you've got a business that is exposed to the high street.
What if you've got a business exposed to cheap, tacky jewellery?
Oh, are you insulting my... I was like,
no, I didn't say if you wear it.
At 7:36 in the morning. Oh,
2,000 jobs at risk as Claire's goes into administration. What?
No.
So Claire's, it's jewellery, it's like Halloween stuff, is it? Or...
It's like tatty, it's like cheaper, more accessible kids jewelry, everything from, you know, squishy Hello Kitties to strange things that are called putty.
Right.
But, you know, aimed at the cheaper end of the market. And it's a real shame, actually, because I'm not a fan of Claire's per se, but I do think it does have a USP. The problem is the USP is tied to a dying high street in the UK.
Yeah, this is the problem. You don't get this. You don't hear many people ordering online, do you? So that this needs footfall.
Yeah.
In the shopping centres, on the high streets, and it's just not happening, is it?
Exactly. And no matter where you go, you could be like in the high street of Weymouth to the high street of Kingston, Wallington. You'll see that the Claire's might be doing well, but everything else next to it's either shuttered or a charity shop. Yeah,
exactly. And the reason why you see so many charity shops on the high streets is because they don't pay council tax, and they don't pay... they get the rent for free, so it's just to fill up the shops.
Yeah.
So really sad there. But yeah, 2,000 jobs at risk. Again, another one. We just continually see it, don't we?
Yeah. Andrew McKilvey saying good morning all. Selling grain LNG to consortium, the grid, including Centrica. Great news. Good one. We'll have a look at that. Steve Davies, morning. Kate. Kate's early today. She's normally on the late step.
Or she's getting in from the night before.
Yes.
Which one is it, Kate? Let us know. Supersonic telling us that 9% of Greg's shares are being shorted. Well, I hope that was a while ago because they'll have done very well.
Yeah, and those of you that heard me talk about Aviva a few months ago, yeah, Aviva is still smashing it. Calling out to James and also to our director today. Well, we've got Dom and Cam. Dom, I hope you heard me talk about Aviva. You were asking me for... Right, good morning, Jugga Jugga, and Derek as well.
Right, so what happened in markets yesterday? Well, it was the great rotation. That's right, NVIDIA, they came in, they sold it. And they sold tech overall to buy Russell 2000, to buy the Dow Jones. So you're seeing that money come out of expensive, insane tech valuations, and you're seeing it going into proper businesses that will benefit from rate cuts. And that includes your retailers, doesn't it, Ange?
Yes, and there's a big week coming up for retailers as well. Well remembered, Rich. So the Walmarts, the Costco, the Home Depot as well. And we are seeing, you know, all this rotation as well, you know, in the airlines. Airlines have been doing well. American Airlines, United. And also, you know, we talked about, you know, Home Depot already, but the consumer discretionary might start to do well now. So the resorts, you know, casinos, yeah, whack it up. Here we are. I'll try and zoom in for you. And it's come at a time when, you know, markets are still, I'm going to try and trigger Rich again here, still, you know, near all-time highs. I know this really annoys Piers as well because he's waiting
No, remember, we're short calls, so all you need is the days to go by and it not to go up.
Yeah, so days to kind of go sideways. So, yeah, and this all feeds into and dovetails nicely to that earlier data that we had, that fear that we were going to have this hotter than expected CPI data. Didn't materialize, did it? It was by the markets. The markets reacted.
No,
like
the
it
market
was hotter than
the market ignored the core, which is the one the Fed watches, and decided to go with the headline CPI of 2.7, which was the same as last month. So, you know, you're missing target, but that's all right. You know, it's not going to go up in the future.
What do you make of? I asked Piers this, and he said he's not sure yet. What do you make of all the talk of the numbers being massaged?
Oh, and inflation numbers aren't massaged. No, that's conspiracy theory.
Cool.
Yeah.
Steve saying, has Trump been involved in our GDP figure? See, Steve has been listening. Looks like something we can only dream about.
So, talking about Trump, you have mentioned it, and so we probably need to go on to the big meeting tomorrow. So we've got the Times are talking rubbish this morning, apparently. They're shocking reporting is what the White House have called it. But the Times have gone out with a story that US and Russia is proposing a West Bank-style occupation of Ukraine. So it will take the current territory that Russia has illegally invaded, and it will draw the line there, the current borders, and then Russia will continue to occupy it, but Ukraine will still own it, and it will still be part of Ukrainian territory. Because the West Bank's worked so well.
Clearly.
That hasn't resulted in any fighting at all, and is as good as a ceasefire.
Yeah.
So that
Peace
is what Witkoff has been speaking to Russia about, and is expected Trump and Putin to talk about tomorrow. But let's get that quote from the White House. And they say, Anna Kelly says, this is total fake news and sloppy reporting by the Times, who clearly has terrible sources. Sorry, is this Trump's daughter? Or clearly has terrible sources. Nothing of the sort was discussed with anyone at any point. Deal done. It's coming out tomorrow, isn't it? That's exactly what's been talked about. Because we know the press secretary of the White House have been caught lying in the past and continue to lie. So is this another diversion in their answer there?
I think this is another clever way of, it's called the done deal illusion. So you create an illusion that some deal has been done, but actually nothing has changed, right? And Putin, I think, has been very clever by accepting to speak to Trump. He's kind of, given a nod to agreeing to something, but he's not going to bend over backwards during the talk. He's not going to, he's not going to cease anything.
Because that's what I do. I make deals.
It's that he makes deals. It's the art of the deal.
The deal, and not give anything away.
Let's look at where that would be then. We are talking do you call that a pink or a peach colour?
Salmon, darling.
That would be the new West Bank. So I guess it's the East Bank.
Oh, the East, yeah.
And the important thing, if you are a Forexpo shareholder, is the Forexpo mine is here. Therefore, that's, that would have no impact at all. And peace would be taken as a good thing. And the Times are discussing that this morning. Is now a great time to buy shares in Forexpo? And it goes through all the details. But unfortunately, it's not as simple as that, because the founder of Forexpo is in some serious trouble. And that's the other problem. So this article does go into that, goes into all the details, and shows you the share price. It's now 20% of what it was pre-incursion, if that's the right word. And it also goes through this Ukrainian billionaire situation of why Forexpo might not be as obvious a Russia play or a peace play if there is something comes out.
This is the timeline for you, trader friends. I have tried to give you as much heads up as I can if you are going to be trading this tomorrow, because it is going to be a moving feast. So we have them meeting in the morning, Putin arriving in Alaska, expected in the morning itself. And then we've got mid-morning Trump arriving as well after that. They're going to have, obviously, pictures, late morning historic handshake.
They're going to have a cup of tea, cup of coffee?
Tea, maybe. I don't know what they have in Alaska.
Vodka?
I don't know. Salmon croutons or something. I don't know. And then you have this potential Zelensky involvement in the late afternoon. No sources.
They're going to give him a call.
Yeah.
To tell him what's been done.
And he's going to sit there looking, if history repeats itself, he's going to sit there looking like a mug and not be able to say anything.
You're not going to see him at all. They're just phoning him to tell him.
This is what
and then arrange a second deal, and the second deal may involve him.
See, I didn't even think he's going to even get a call, but that's just me.
No, Trump's already confirmed. If there's something comes out of the meeting, he's going to call Zelensky straight away, and then they'll invite him to a second meeting.
Yeah, I don't think anything's going to come out.
So you think the Times is rubbish?
I think it's just going to be we're going to issue maybe a line, but there's not going to be any big. Which is why I've held fast on my. I know some of your trader friends have decided you can't risk it anymore. You're going to get out of the NATO ETF or related.
The defense stocks.
Exactly. Whereas this is my position. This is not any sort of advice whatsoever. This is just my own humble opinion. Either way, they are going to come up with nothing. They might say they have, but they'll come up with nothing. And we will just see this situation continue. Andrew McKelvey and I were talking about this yesterday. If there is any dip at all, especially in stocks like Rheinmetall, then it is buy the dip.
Right, segue quick into iron ore, as we've just had the reminder. So, big drop in iron ore overnight. We saw it down. Let's see, when did it start to drop? It was 3 o'clock this morning. So we had been up as high as 800 a couple of days ago, and now we're down at 776. That's back to where we were on Monday morning, more like Friday's close. So let's have a look at where Rio's was on Friday. And let's see if it's going to... Ange, have you got Rio Tinto?
Yeah, I'm going to put that up right now. Here we are.
So should Rio's open where it was on Friday? We've had the FTSE go higher. We've had iron ore looked as if it was going to break out, but no longer. So there we go. So £45, is that right?
About 46. Yep.
No, but on Friday?
On Friday.
It was at... It went up from 45 to 45.60.
Yeah.
And it's now at 46.60.
Yep.
So is Rio's going to open down 2% this morning? And if it doesn't, is there a trading opportunity there? I'm certainly going to be looking at that. Antofagasta is going to be up 1%, says Singers on the pre-market. So you might see the sector not get hit on the open, and we might have a chance there. So, miners are ones to watch this morning. Of course, the FTSE is going to be in focus on the back of those great GDP numbers. That's one to watch there as well. Of course, Anglo's also affected, BHP also affected.
Yeah, some of the others that we're getting indications, higher early indications. Aviva, Mo, call out to you there, up 2%. This is on its first half results, and the company also saying it is confident about its outlook on meeting its targets. Centrica also indicated up more than 1%, and we also have National Grid indicated higher as well. We talked about this Grain LNG deal earlier on with Andrew McKelvey.
further complication to Rios is that it is ex-dividend, along with half of the FTSE this morning. So that is $1.48, which is about £1.10. So it's already going to be down £1.10 from ex-dividend. So then we're talking 44.50.
They do good maths in Scotland.
£44.50, having closed at 46.60. So that's going to be really interesting to watch. Other dividends this morning, there are a whole heap of them. You are going to be getting paid if you own the FTSE this morning, because BP goes ex-dividend by 8 cents. Glaxo goes ex-dividend by 16 pennies. Hikma, HSBC is a bit of a smaller one. That's only 10 cents. London Stock Exchange, the sponsors of our opening bell in the future, will go ex-dividend. Melrose will go ex-dividend. Pershing. Pearson, one of the forgotten stocks sometimes in the FTSE. Shell also goes ex-dividend by 36 US cents. Unilever by 39 pence. So the FTSE will take a big hit this morning from dividends alone.
So maybe that GDP number might not be offset. Around this time, normally I'm outside getting the upgrades and downgrades for Rich, but I'm in here today, so I can give this to you right now. Porsche, Deutsche Bank. You like a bit of Panamera action, Rich?
No.
What a fancy car.
9/11.
There you go. Deutsche Bank cutting the target price to 50 euros from 55. We also have UBS, Deutsche Bank raising the target price of that to 35 Swissies from 32. And the last notable one is the MTU aero engines. That one's raising the target, Deutsche Bank raising the target price there too, 430 from 425 euros. Otherwise, quite a quiet morning so far.
Excellent. Right, we're going to go to guess the chart, and I'm going to run and get my order in Rios into the system.
Cool. Right, we are going to, producer Phil, you're going to give us a quick hint. UK or US? US! Does this mean we have a US themed banger coming up? Let's do it!
Won't stop, he's clicking all day. Short then long then fade away. Angel smile, she's playing it cool. Says I watch the moves, let you play the fool. Dom's on comms and Cam's on shot. Terrence says cut when it's getting hot. Rich is chasing every move on screen. From BP's rise to Tesco's green. Ancient's back with a steady style. She's not in the trade, but she's watching the pirates going down. I'm yelling timber. Shot so sweet, you'll remember. Dreams and UK pride. Trade live with IG's on your side. We'll ride this wave, we'll set that pace. From the city to every trade in space. Axel smiling, we've all got skin. Trade of the week is the one we're in. We play the game, we roll the dice, but please remember this is not financial advice. From Shell to Rolls and BT Lines, UK stocks, yeah, the trade's all mine. It's going down, I'm yelling timber. IG Live, you'll remember. Axel's cold, which
That's my favourite yet.
Oh my goodness.
That was brilliant.
So impressed. I told producer Phil too that I wanted something that was similar to timber, and he got the word timber in there with the with the feel as well. Well, you guys jigging along with me. I needed a cowboy hat and a horse.
Right, I'm going to say, when we get to the new studio in a couple of weeks' time, I would like the lyrics to give you hints about the stock.
Pushing the tech.
Little hints about the stock, because that was hard. Did anybody get it? Hamish again.
Was it Hamish? Target. I was close. I was guessing a U.S. consumer stock, and I went for American. Target. Well, maybe. You know, with the still expected two, right? Interest rate cuts in the U.S.
So Hamish hit the bullseye.
Yep. Nice.
Did anybody else get it? Maturing got it after Hamish suggested it. That's as good as getting it. Good stuff. Right, I've got my Rios orders in. We got 2 minutes to go. Also looking at Anglo Americano, and we're looking at Antofagasta on their numbers. Remember, loads of ex-dividends this morning, so do not get worried at stocks being down 1%, 2%. They're ex-dividend.
Yeah.
Apart from Rios, which should be down 1.5%.
Let's have a look. I'm getting my filters ready.
I started to let some of my Lloyds go yesterday. Because the market did start to feel like it was rolling a little bit.
Yeah.
Not the UK, but in general. So I just wanted to take the book size down a little bit, give myself, you know, something to play with. Sold my ASML as well.
Oh, Ronnie's not going to be happy with that.
Yeah, I know. Keeping it for the kids.
Yeah. Do you want to hear Andrew's play of the day?
Yes.
Ooh, Carlsberg. It's going to be down, people. I think this is going to be down because of that operating profit guidance. Also, we were talking about this earlier on. Impossible for me to imagine Ange 10 years ago saying that, you know, the biggest growth products for all these companies would be non-alcohol, alcohol-free beverages.
Core beer is not doing well, is what the CEO just said.
Yeah.
Core beer not doing well for Carlsberg, but their growth areas are, which, as Ange mentioned, doesn't have any alcohol in it.
Ronnie's been drinking too much non-alcoholic soft drinks and brew.
I wonder what other companies could do something that is so against their core business. You know, could I know, McDonald's start selling salads? Oh no, they already have. Yeah. Some good ideas there.
Hapag-Lloyd also in my view today, because it's come out with vessel deliveries, global vessel deliveries. For those of you that watch at Space.
Right, really quick look at commodities before the 20 seconds. The London Stock Exchange is about to open. We got oil pretty much where it was yesterday, small higher. You see iron ore there, Collapsio. Silver down 12 basis points. Copper relatively unchanged. Copper, of course, rallying back off the $4.40 level. Right, let's go into
it. 3, 2, 1.
I saw the candles rise. I saw the candles rise at dawn.
Oh, somebody hit the wrong button. Right, remember then, screen up, guys. Lots of ex-dividends today. You're going to see it in the worst performers. It is so many of the big FTSE stocks. Oh, Vodafone. I was almost tempted to let some Vodafone go yesterday as well at 86.5. But I managed to pull back, hold back. So there they are. BP down 76 basis points. Now, I am trying to short Rio Tinto and American, Anglo-American. So I do want to watch where they're open. But
okay. You do that, Rich. Just telling you that Carlsberg has uncrossed and Carlsberg is moving down. quite rapidly after that first half miss, down around 3% there. Just looking elsewhere as well to the FTSE, because now it's completely changed. Aviva, top of the pops there, 2.5%. We've got Rolls-Royce as well. Kate Murphy out there. You still in Rolls-Royce? She's still in Rolls-Royce, do you know?
Look at that, Rios. If we can just change the minors there. Rios straight down to the level we talked about, 44.70. We said for iron ore to look where they would be, it would be 44.50. And there it is, almost straight there, 44.70. Last seen on Friday of last week. BHP only down 1. So, sorry, if you take Rio's dividend out, then that means that it is down about, 110, so that's 2.5, 1.7. So Rio's down 1.7%, BHP down 1.1, Anglo-American only down 83 basis points. So perhaps we'll see some catch up there from Anglo's on the way down. But Glencore, of course, not an iron ore producer, it gets away with it. Going back towards the £3 level.
Interestingly enough, do you have a position on Antos?
No.
Because it looks like investors either taking profit or seeing something else on the headlines at the moment, because Anto posted a nearly 60% rise in core earnings in the first half. This is news that came out about an hour ago. Also, it had positive news from its Los Palambres project. So still looking out there, trader friends, to see what's causing its shares to fall 1% there.
Right, Glaxo, as we said, ex-dividend, HSBC ex-div, Shell ex-div, BP ex-div, all there on the losers board, but of course they're not really losing. They're just paying you out, paying out your interest. Then we see, Unilever again, that's another one. So Anglo's is probably the biggest loser on the day, along with Aberdeen. Is Aberdeen ex-dividend or is Aberdeen just down?
Let's see, while you're
I think
checking that.
Aberdeen is just down. Yeah. And then we've got Persimmon, Pearson. But what's up, Ange?
What's up? I can tell you what's down. That's much easier to tell you. ThyssenKrupp, look at that chart there. Down more than 7%, actually more now, down almost 8% there. This is after its results. So that is quite a big move there. Also, it downgraded, disappointed on its outlook, saying that, sales will now fall 5 to 7% during its fiscal year. So negative news there.
In the elevator down. Right, back to the UK, we got Rolls-Royce. There it is up, we're back towards all-time highs, towards the £11 level. And Centrica up 1.5%. We don't see Centrica on the big movers often, do we?
No, we don't, but it's a good divvy stock, if I'm not mistaken. Centrica's a good divvy stock, isn't it? Yeah.
BAE as well, you're going to be happy there, Ange. They are liking the West Bank story.
Yeah, so my humble opinion, Rich, as you know, is that even if we get something out Friday, or even if we don't get something out of Friday in Alaska, the fact of the matter is Ukraine and the rest of Europe are still going to have to up their weaponry, drones, whatever.
Absolutely,
right?
Yeah, they've got to restock.
Yeah. Rearmament 2030. Look it up, trader friends, if you haven't. I know RSAX has already. So look it up. So that is an either way. So whatever happens tomorrow, I'll be watching BAE Systems and Rheinmetall as well.
Yeah, I'm just looking for Rheinmetall in the European movers there, and they're not in any other significant moves. RWE's down 2.6, Porsche's down 80 basis points, and your favourite Kering down 60, but at $216. Then we've got Airbus up 70 basis points, Schneider, Ryanair, SocGen, and BNP.
Nice. Do you want to hear another don't want to be a negative Nigel, but I can tell you all the downers today.
Is Nancy on holiday?
HelloFresh. Have you ever used HelloFresh? 'Cause I know you like ordering deliveries to your house.
That could actually have been one of my best shorts of all time.
Did you?
Because
Why didn't you short it? You were telling me about
I
this.
did.
Oh, you did? Great.
And that was long before I started here. But we were getting HelloFresh into the house, and we would take. I think we probably did it for about 20 weeks of the discount.
Yeah.
And we saved up all the menu cards, put them into a folder, and then you had your own cookbook.
Yeah.
I didn't need HelloFresh anymore. So they discounted me, gave me all the recipes, and then I go to the shops and buy stuff myself. The whole business model just doesn't make any sense.
I shorted because Gusto knocked on my door and I said, love the concept. What's your biggest box? 8 people. And then they looked at me. What's your smallest sit-down dinner? 8 people. Close the door. Bye. So HelloFresh.
Have a look at the daily chart, or have a look at the weekly chart and see how screwed this thing is.
Oh my goodness, yeah. Even if you go further back.
No, back to like 2022.
These stocks, yeah,
Look at it.
totally messed
Biggest
up.
short in the world.
It's the biggest short, and also you knew where it was going to go after lockdown, right?
Oh yeah, absolutely. Yeah.
So HelloFresh, this is because it continues to have a rough ride and continues to cut its outlook, and is on track, if it continues in this vein, on track for its worst day since March.
The business model just does not make sense.
No. And I don't think they have moved with the times as well. They should be partnering up with, I don't keep fresh.
Hello Frozen is
Hello
what it should be called.
Yeah, and they're not also moving with the times and giving people sort of more cost-effective options. Inflation's still high, real fuel inflation still high out there. So yeah, other than that, the reinsurers also not having a good day. Swiss Re is down 1.5%. And let's have a look. Shall we go cross over to France, darling?
What would you like to see in France?
You talked about Kering already, but let's have a look.
So, yeah, let's go there. And yeah, on the down moves in France, you've got not too much else. Stellantis, €8.20 that's settled at there, and Air France 13.70. Right, Ange, before we leave the studio for the last time together,
Yes.
talk us through what's been your favourite moment in the last 11 months, because we are coming up to our anniversary as well.
Yeah. I can't believe we're coming out to it. It feels like, it's been such a breeze, and having you here and doing new stuff for our trader friends every single day and then rolling with it. So it almost feels like it hasn't been that long. But how many shows have we had already?
I think we're about 220.
Wow. My favorite moment is when you carried, it was quite recent, you carried a tree in here.
Yes, for Smarter Web.
What you
Actually,
couldn't
let's have a look
see,
how Smarter Web's
what you couldn't see was that I was midway through the door, so I could see producer Phil's deadpan look.
They had no idea why I was bringing a tree into the studio. Right, SWC unchanged, 205 to 215. So boring, no change. The vol's gone.
Yeah.
Completely gone out of it, which is good in some respects, because it's becoming a more respectable. The valuation's not all over the place.
Less volatile.
Yeah.
How about you? What's your favorite moment?
No, Donnie one. Sorry, no, Ange is not leaving. Don't you worry. We're leaving the studio. So this studio is no more as of tomorrow morning at about 9:30. The lights are going off for the last time. The cameras. We are going to throw out the window, and we're getting brand new cameras, brand new lighting, and we're going to have a real background, because just in case you haven't noticed, this isn't a real background.
Green. It's all green here.
So we're
Everything's
getting
green.
a huge upgrade. Thank you very much to IG for paying out. Breon has signed the checkbook.
Nice.
And the cameras are ordered. And so for the next 2 weeks, Ange, what are we going to be doing?
We are going to be plugging in remotely and testing out the kit whilst this is all being gutted. Phil and the crew have already set up a temporary gallery outside of here, because that's also.
You're worrying me. Are you still on? Are we still on air?
We're still on air. We're still on air. Don't worry, guys. Don't worry. And also, other than Breon, thank you, Breon, for signing that check. We also have to thank our most important people, who are our trader friends, who made all this possible with your likes and subscribes.
It was literally, if you didn't like and subscribe, then we weren't getting new cameras and lights.
Yeah.
So, and
no haircut for Rich.
Well, no, the great thing, the new cameras have got a filter. There, Andrew McKelvey beat me to it. Better cameras with a sharper focus, a good idea.
That's okay.
He literally beat me to it. I was like, hey, yeah, the new cameras have a great filter on that take off about 5 years.
More like 20 for me. Thank you so much, guys. Mature, and also we're in danger of losing our amateur status with all these changes.
Very true. Very true.
Yeah. But it will be exciting. We will still be here. Rich and I will still be bright-eyed and bushy-tailed every morning. We won't leave you. And then we'll be back with this new studio.
So next week, I will be coming to you live from Scotland.
And I might be from sunny Dorset.
So yeah, but yes, first of all, we'll see you tomorrow, because tomorrow, of course, a huge day. It's the start of Fantasy Premier League. And there is your link in the chat for the Trade Live with IG Fantasy Football League. I expect you all to be joining there. I'm very excited to win that.
Right, we got Axel coming up next, waiting in the wings. I can hear him, so stay right there, get your coffee, get your tea, and Axel is going to come in.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Okay guys, before I teach you how to use this, I have to teach you how to use this. The mind. The cash return wasn't all about speed, it wasn't always about power, it was about the mind. Become the bull. Visualize greatness. Okay, minds are ready. Time to go. Hey, come on, Pat, come on. Cash returns, come on. Oi! Well, you're not going to get better than cash returns.
We're watching a crisis unfold in the UK, and we need to take bold action. Our stock market, once the envy of the world, is in a dangerous downward spiral. At the same time, the UK is stuck in a damaging savings-first mindset, with far too few people investing to build wealth for the long term. With our Save Our Stock Market campaign, we're calling on the government to deliver the urgent policy changes our stock market badly needs. From scrapping stamp duty on UK shares to encouraging a shift away from stagnant cash savings and using incentives rather than penalties to get people backing British firms. And to show we're putting our money where our mouth is, we'll be offering every new customer who joins IG across July and August a free UK share bundle. For too long, policymakers have been paralysed by the desire to keep everyone happy. But the time for working groups is over. This is about getting more Brits investing while saving a strategic national asset before it's too late. You can read more about IG's SOS campaign and free UK share offer on our website.
Good stuff, right? We've got Axel Rudolph here. We're going to do a very quick, technically speaking, because, oh dear, I've lost money while you've been on holiday, Mr. Rudolph.
Oh, sorry to hear that.
So we're going to dive right in. The Nikkei 225 on the daily chart. Let's have a look at this one.
Yeah, if you could just zoom out to the last 2 bars, basically, that'd be great, Rich, because I had a client yesterday who unfortunately has been short and basically has been suffering. Ask me, can this thing come off? And basically, it is starting to, very short term, as we can see here, with perhaps some investors taking some money off the table ahead of the weekend. But the trend is clearly up, and we've made new all-time highs. It's been very, very strong. We went above 43,000 on the Nikkei 225, all of which is very bullish. But if you go on the 15-minute chart, what I found really interesting yesterday is you can see on the left-hand side of this chart here, 3 higher highs on the 15-minute chart. But if you look at the bottom of the chart, the RSI, we had lower highs accompanying these higher highs on the left-hand side of your chart. And basically that was telling me it's negative divergence, and the odds were pretty high that we could see some sort of return to at least short-term support. But the interesting thing now is, can you see that sideways trading range you're just pointing at? That was the first support area, but then we fell through that later on today in the Asian session. And that means that perhaps we could see a short-term reversal, or perhaps even a longer-term reversal happening here. We'll have to see what the chart will look like at the end of today's session, and whether we will then have perhaps what is called a bearish engulfing pattern on the Nikkei 225 futures chart, for example, on the candlestick chart. But let's not jump the gun. Overall, from a daily perspective, we're still pointing higher. This might just be a minor correction in a very strong uptrend. But I don't know. I'm keeping my eyes peeled on the markets at the moment because I'm not as bullish as everybody else is.
Yeah, now, let's go into that then. The US 500, and if we could have a look at this one and let me know what you think, because this is very dear to my heart at the moment, Axel. I'll start off with a daily chart there and bring it into, yeah, I guess since April is the good one.
Yeah, I mean, basically what you've seen here before we had that sell-off at the beginning of August was also a negative divergence. And I was on holiday then, but I thought we could come back to that support area, which is what we did. We basically bounced off the 5,700 mark and since then have risen again to all-time highs. So to be quite honest with you, Rich, and this you might not want to hear, for the time being, it's bullish. I mean, it keeps on rising. I know people love to sell into a bullish market and thinking, oh, it can't go any higher, but it can always go higher than you think.
Yeah.
And even if you think fundamentally it doesn't make sense, right now, the majority of investors seem to think it does because the market keeps seeing buyers and it pushes higher. Now, having said that, and this is why I'm quite interested in looking at these markets in detail now, we are in the summer period in the Western Hemisphere. A lot of people are on holiday. There is less volume. And quite often you do see movements which can lead to quite a bit of volatility in this sort of time frame. And also, you do tend to see corrections in September and October of each year, depending on what the market does beforehand. But this is a sort of typical scenario I've seen many times before in the last 40 years or whatever I looked at the markets. And I wouldn't be surprised if, and this is a big if we were to see a reversal, and this is just a false breakout. So basically we're seeing these highs being made today, maybe tomorrow, and then next week we're starting to sort of drift off. If that can turn into something that is a bit more dramatic. But right now, that's just speculation. Just look at the chart, and the chart's pointing higher. So as long as we stay above the early August lows, from a technical perspective, from a medium-term point of view, we are still bullish.
Right, so it's that 6,230 level that's the important one to watch.
Because if you look at that level, that's also where the May lows were, the June lows were. I mean, if you go to the left, you can see all these lows there. That's really good support. That's the last reaction low. You had a strong rally off there. And as long as that holds, the trend's your friend. And that's the thing with charts. You need to follow the trend, not what you think the market's going to do, because the price action itself is telling you what it is actually doing. It doesn't care about you or I or anyone.
Yeah. And so, right, let's go into a theoretical world then. Let's say we get up to 6520, 6,520, and then it starts, like you say, the momentum kind of fades a little bit and it starts to roll. Is there anything from the chart previously that suggests what the downside could be if it goes down through that 6,250 level? The reason I ask is because I probably want to sell some puts somewhere, and I want to sell them at a level where obviously the market could drop to, but might find support at that level further down than 6250.
Well, that will very much depend on the fundamentals, because basically, let's not forget several things. This market has been driven by retail investors. A lot of the institutional investors actually think the market's completely overvalued. They didn't buy in April. They had to then sort of get in. But the strong rally from the April lows has mainly been pushed up by retail investors who were right, and then institutional followed. But at the moment, according to the latest Bank of America survey of fund managers, 91%, and this is, I think, a record high, 91% of fund managers believe that the market is overvalued in the US. Yet they keep buying it. Probably because of AI, they're forced to buy it. And we've got this huge concentration in just a few stocks. But if you look, and that's why I wrote an article about are there cracks appearing in the US economy yesterday, which you can find on the IG website. I looked at corporate bankruptcies, and nobody talks about this, but we had 446, I think, large US companies filed for bankruptcy in the first 7 months of this year.
Wow.
That's the highest year to date since 15 years ago, I believe. And it exceeds the full year totals for 2021 and 2022. So that's telling me perhaps there are some cracks showing. And also, if you look at the small businesses, there are about 236,000 small businesses in the US, and they face import costs now because of the tariffs of about $202 billion. That's no small amount. And let's not forget that they don't have the structure in place to deal with all this complexity to do with tariffs, etc. They might not have the the resources with regards to compliance and all the rest of it to deal with all of this. And basically, my battery on my laptop is running low, I've just seen. So just bear with me for a second.
No problem. I'll just talk about what we've seen in the last few days in the Russell 2000. Russell 2000 having a huge upsurge now, of course, because we're going to get rate cuts in the US. But what we're talking about there is the smaller companies, and the smaller companies are represented in this Russell 2000. That's not got any of the Mag 7, of course. It's the real America. And what Axel's talking about there is, yeah, that's wonderful. You've got rate cuts coming through, and that will help. But could it be too late? Because, you've got the Russell 2000 hopium in that the 5.5% move in the last 2 days. But if we see that start to come off, and we see the economy, the jobs lose, more job losses, and real slowing, then we've got a problem, because this is going to come off. Forget the Mag 7. The Mag 7 obviously does its own thing. But real America and the Dow Jones, then you see weakness there. Now, we have lost Axel, I'm afraid, but that allows me to have a little rant about what we saw yesterday. And that was, of course, bullish. You heard it drove peers yesterday to swearing live on air. because he couldn't believe that we were actually IPOing a stock called Bullish on the New York Stock Exchange. Now, what happened when it did IPO? Well, of course, it started up in above $100, having IPO'd at 33, and the stock came off. Let me try and get rid of the RSI there, because I want you to see this in all its glory. And we'll go to a 10-minute chart. Is that going to be better? It's really hard when you get a new IPO. Of course, you can't really see the GIP of the day very well. So let's see if I can get this on a chart where you get everything. No, that's not going to show it. So yeah, the charts just don't like when it's a brand new stock. But what you can see is it opened above $100. Now, this is the Bullish IPO yesterday on the New York Stock Exchange. Everybody gets very excited about these IPOs. We've seen what's happened in the past few weeks. The stocks have gone up 100%, 250%. If you are buying stocks on the IPO without knowing what they do, without looking at the accounts of the business, without looking at the valuation, you're not investing. You are not even trading. You're gambling. And the people who were buying this stock at over $100 on the open yesterday, you deserve to lose money because you haven't done any work. You're just getting caught up in the FOMO. And this program is all about getting people to stop doing that, to stop losing money, to try and get discipline into your trading. And this stock finished at $68, right? So if you've bought it at 100 on the open, 5 hours later, you've lost 33% of your money. That is not what we're here for, right? We're trying to teach investing discipline. We're trying to teach trading discipline. And these IPOs that everybody is love to get involved in, please do not make the mistake of thinking you're doing anything else other than sticking 20 quid on the 3 o'clock at Southall. Right, and Julian will be back shortly, but enjoy the rest of your trading day. I'm off to film the next episode of the podcast, The Art of Investing, with my good friends, Mr. CJ Fillingham and Mark Holden. And we'll see you tomorrow for the last day in this studio.
Okay, guys, before I teach you how to use this, I have to teach you how to use this, the mind. The cash return wasn't all about speed, it wasn't always about power, it was about the mind. Become the bull. Visualize greatness. Okay, minds are ready. Time to go. Hey, come on, Pat. Come on. Cash returns, come on. Oi! Well, you're not going to get better than cash returns. The cash returns.
Today we're here because we've recently launched our Save Our Stock Market campaign. We just want to raise awareness for terrible cash returns that everyone is getting with their money just sat in cash ISAs. What we want to do is raise awareness for the great returns that you can get on UK stocks and help revive the UK stock market and get people investing.
There's a lot of bad feeling about the UK stock market, and it's really negating people's view on the UK market as a whole. There's some great companies. If we just start the ball rolling on people getting behind the UK stock market, then we can start to get the interest. And it's days like this, we get awareness of all the crowds talking about stocks. It's really that awareness, and ideally we'd like to take it to the government. We would like cash ISAs to be reduced, not because we don't believe in the chance of people saving, but more that you get higher returns, as much as 7 times historically in investing that you can from cash. And that's not saying people go out and take a load of risk. It's about education, and it's about helping people to understand the benefits of investing and the limitations of holding their money in cash.
We're watching a crisis unfold in the UK and we need to take bold action. Our stock market, once the envy of the world, is in a dangerous downward spiral. At the same time, the UK is stuck in a damaging savings-first mindset with far too few people investing to build wealth for the long term. With our Save Our Stock Market campaign, we're calling on the government to deliver the urgent policy changes our stock market badly needs, from scrapping stamp duty on UK shares to encouraging a shift away from stagnant cash savings and using incentives rather than penalties to get people backing British firms. And to show we're putting our money where our mouth is, we'll be offering every new customer who joins IG across July and August a free UK share bundle. For too long, policymakers have been paralysed by the desire to keep everyone happy. But the time for working groups is over. This is about getting more Brits investing while saving a strategic national asset before it's too late. You can read more about IG's SOS campaign and free UK share offer on our website.
Hey, trader friends, and we have that promised special treat for you in the studio with me. Especially because all of you are asking for a US equity specialist. Is Julian Wheeler from Shard Capital. Welcome. Just quickly tell our clients and our trader friends what you do at Shard.
I basically am part of the investment committee, but with sort of overall oversight and investment ideas in the US equity market.
Fantastic. It's an interesting time, isn't it, Julian, for the markets? You know, half of the people that we speak to all saying, Ange, when is this correction? When is this summer correction? Or has seasonality been thrown out of the window?
Yeah, well, I think that's exactly, I think you've got it there. The usual seasonality, which often sees a correction August, September, we're not through there, so it could still happen. But what we don't normally have is a 20% decline in the S&P from mid-February to mid-April.
Yes.
So this year was rather different.
Tariff tantrum.
Tariff tantrum, nobody was ready for that. Everyone was overweight in February and they moved to underweight by April.
So what happens now?
Well, what happens now is that while everybody's expecting a correction, the bar got set so low. It's like imagine a sort of high jump, you know, which I do. I'm very tall. If you set my bar at 3.5 feet, I can get over that pretty easily. So the earnings season we've just been through was set so low after April, and everybody's saying, can't give guidance, don't know what's going to happen. So they had a free pass. So there's been no disappointments, no reason for the market to go down.
Taking a look at the US 500, which is, of course, the S&P 500 here, you know, we're still looking at 6462 there and creeping higher, you know, green bars outnumbering the red bars there.
Technical trading says that's going higher. There's nothing there saying, and every dip has been bought. You can see down the bottom of the chart there that there's all the volume, big, heavy volume selling. And then we've crept up. And this, of course, is the worry slightly, is that it's very thin out there. August is traditionally thin. But what's interesting is that retail is now making up a larger percentage of the market than I think it has done for some time.
Now, this is super interesting because we were talking about this yesterday with peers from Macro, our trader friends. You guys heard this here too. You know, what happens in a market when retail's coming in? We're trying to find this number. I know you've got this especially for us because I called you yesterday. Julian, please get this for our trader friends here because all the apps as well, you know, we're laughing about this, but it's actually not a joke. And we've seen this in the US. You might as well take away the sell button. Everyone's just going buy, 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 right, on their apps. with the fancy colors. Also, passive investing is growing.
Passive investing has been growing for decades. I mean, literally 2 decades now. Passive investors probably control about 40% of the market. But it's now reckoned that retail's got about 20.
And where is this figure that's 20%?
Well, you know, it's open to question. You base on that. You can only base that on the amount of money in places like Robinhood, places like Schwab, these retail accounts. These accounts all trade on margin as well. So it means that during August, when most institutional fund managers are sort of quietly away in, I don't know, the Hamptons or wherever else they're going to be, retail's taken a bigger share. According to one of the trading desks I speak to, one of the sales traders there who sees the flow, said, we reckon retail's doing over 20% of the volume right now. And they don't have to sell. That's the big difference.
They just sit on it.
Well, not only do they can sit on it, but it's not their job on the line, right? So if their size of position, if they get it wrong and want to change their mind, click. They can sell, takes 10 seconds, less. Now, you're an institution, you own 5 million shares of, I don't know, let's say United Health. Big disaster institutional owned stock. It's taken months for everybody to get out of that. It's gone down and down and down. Retail investor would say, don't like that, gone. So they are fearless because they can change their mind and exit quickly. The institution can't do that.
So how do we navigate these, markets? Because clearly, if seasonality is out of the window, things are not progressing as they should. We've got Trump tweeting left, right, and center. You'll not believe it, trader friends, but it's true. Ask Julian, ask any of my guests. I almost have like if you don't hear from Ange, the night before, sometimes they do. Quite often they do now, because it means something has happened overnight. And I'm sure Bill can tell he's woken up to like a stream of messages from me. I mean, these aren't normal times. No, Trump has made this market more of a day-by-day sort of almost game show. But the problem is that he's a bit like the little boy who cried wolf. He frightened everybody in April, absolutely scared the bejesus out of everybody with his tariff numbers. But of course, we now know that that's nonsense. It's not happening. Taco. Now, he could turn around, and all commentators have said that the deal he got with the EU was definitely in America's favor. So he could turn around and say, well, have I been so stupid? And is it playing to his political support? Yes. The whole idea of what's coming will be down the line. It's too early to know. Neil and Andrew McKelvey chiming in there on the chat right here. This is great because we're going to get Julian first time in the studio, and he is going to answer Andrew. So I know you can talk about that.
Oh, there we go.
Are you shorting the US market? And if so,
I do short stocks. I see he's picked up Palantir and Nvidia. Palantir is the most expensive stock in the market, but it's also doing incredibly well. And I would say, no, I'm definitely not shorting Palantir. Very simple reason. It was the same question we were asked about Tesla a few years ago. Tesla was crazily, stupidly overpriced. And Palantir probably is as well. But it's doing well. They haven't disappointed. They put up better earnings than expectations. So they have not disappointed. So the stock goes higher.
And
it's a big retail name. It's a big retail name as well. And the retailers are not going to be shaken out. Guess what? So's Tesla. Big retail name. Tesla is a short, fundamentally, under any scenario you like, apart from it's a cult retail stock. So there are much better things to short.
Yeah.
But I do short, yes. But not Nvidia either. Nvidia's the leader. It's not actually that expensive. That's the thing. You want something that's actually going wrong, getting worse. That's a short.
Yeah. And Nvidia also a household name now.
Well, household name. It's not as heavily retail owned. So it's a big institutional name. But it's the world leader in what it does. Why short world leaders? There are really a lot of bad companies out there to short.
Talked about Palantir, about how it is, expensive, but it's still good at what it does. You like another one, don't you? You like another, I think we talked about this yesterday, Cloudflare.
Oh, yes. Okay, so Cloudflare, if you put it on a Palantir valuation metric, is incredibly cheap. It trades for less than half of Palantir. Cloudflare is far less known, but it's creeping up there. It's doubled it's doubled off the April.
So this is a really nice chart from a technical point of view.
Now look, that is a harem-scarum name. That is a trader's stock, as you can see. When the market comes down, it will get clocked. But they have performed and performed and performed. And if you take that chart back far enough, you'll see that it's now gone through its 2021 high, which is a bit of a key. It went right down. There you go. That's the peak of the market then. So it's on the verge. No, that's 220. It's on the verge of going through there. Cloudflare is, I call it the fourth cloud. So you've got Amazon, Microsoft, and Google. Cloudflare is number 4. But significantly, it was engineered and architected differently. So without going into too much detail, it's a more efficient mousetrap. It does compute, it's infrastructure, it's storage, but it's just more efficient. If you consider that Microsoft now said they have 75 billion worth of cloud revenue, Azure revenue. Now, we can't work out which bit's what, they're not going to tell us everything. But 75 billion. So Cloudflare's revenue at the moment is 2 billion. All they have to start doing is taking share and pieces. They don't have to win business from Amazon or Microsoft. They just take a piece of it, of a massively growing market. I see that share going a lot higher. Oh, and what's more, at 70 billion, it's one of the largest companies not in the S&P 500.
Love it.
One day.
When it gets added.
That's a little Brucey bonus. That's that'll happen sometime. But we don't, I'm not saying buy it for that reason. But it's a great company. Great company.
Love it, tech, and just up my street. You guys know that I love my tech. The other thing I do like as well is GLP-1. Do hit the like and subscribe button if you're enjoying this, and put those questions through. We'll get them to Julian. The other space that I really like, GLP-1, but Novo has been hit recently because of, competition, and also talked about, having to cut costs. We've got all these, pill versions coming on. Interestingly enough, I found out that the Japanese, had the pill version years and years and years ago, but they don't really need it as a nation, do they?
No, they probably don't.
But Novo and Eli, very interesting to me because I have both.
Okay, well, I prefer Eli to Novo for the simple reason that it is not just a one-trick pony. With apologies to Novo, but they are living and dying on the back of GLP-1s. Lilly has a whole load of other things as well, by the way. It has a very, very good cancer drug coming through called Verzencio. It has all sorts of things. Lilly's had a nice sell-off, there you go. Which would say I would put it in the buy zone now. The reason for that last sell-off was that they have an oral pill that they're trying to bring through, which has a...
Give us the name because I can't pronounce it.
It's really difficult. It's called orforglipron. Okay. Yeah, don't ask me to do that again. I practiced for a while.
It sounds like awful diphthong.
There you go. Orforglipron is their oral version. They produced the results. It works. It just wasn't any better than anything they've got. So it's like, what have you done for me lately? What that means is that's opened the door for another small cap, which I also own and have told clients to buy, which has had a huge move just on the back of this Lilly. It's called Viking.
Right, Viking Therapeutics. Yes.
VKTX. It is, now look, this is harem-scarum stuff, but you can see basically that move in the last week was from the day Lilly announced that its drug hadn't done so well. So that's a move from 32 to 40. So we've had a 20% move in the last week. Now, like all early stage biotechs, this company is burning money like crazy. But if they're in phase 3 of this oral version of a GLP-1, if it works, that company won't be around for long. It will be snapped up by somebody. And it's a market cap of about 3 billion, 2.5, 3 billion. So it's tiny.
Right.
Someone like Glaxo, who's got large war chests.
Yeah, AstraZeneca.
All these companies got plenty of cash, not much in their pipeline. Someone will buy Viking if this thing works. So it's a bit of a Hail Mary, but they are in the right space.
Right, Andrew McKelvey coming online as well. You know that I like energy. The energy play as well. So, Centrica, National Grid, some of the Divi plays. And Andrew McKelvey is seeing your question there about nVent Electric. I'm looking at that too. I did ask Piers yesterday because I think Andrew's just got into nVent a month in, perhaps. And Piers was saying hold this stock for another for 12 months plus. So that would mean about 11 more months for you, Andrew McKelvey. But
Levican's asking about CoreWeave.
Yes.
I don't like CoreWeave. I don't like CoreWeave because it's crazy expensive. Its business is all tied up with OpenAI. The trouble with CoreWeave is it's owned by NVIDIA. It makes loans to NVIDIA. It's almost like a channel for NVIDIA. I don't get CoreWeave. Now, you know, very clever you if you paid 50 and you went to 150. Interestingly, I can't even short it. So it must be heavily shorted. As in, my machine said, you cannot short this stock.
Computer says no.
Computer says no, which is actually quite interesting because when something can't be shorted, that means probably too many people are short. If people are short, you don't want to be. So, but I don't fundamentally see why I want to own CoreWeave. I think there are some fairly other hairy, scary stocks that are slightly more transparent.
Yes. And if you're going to go on a play that is effectively a play on NVIDIA, it might as well be in NVIDIA.
Well, NVIDIA is not expensive. I mean, it really isn't expensive. It's much more. You've got to remember, NVIDIA's done pretty much nothing for the last 14 months. You know, got to 150 last July, and we're 180 today. You know, in stock terms, that's really not a lot.
And I don't think it's expensive, given they've gone from talking about petaflops to exflops. So
yeah, I mean, you know, that the AI train is continuing.
Yes.
The gating factor, if anything, you mentioned energy, will be power.
Yes.
Right? If there is a disaster out there, it's that the electricity demand,
yes,
we have a choke point.
There you go. That is my theory precisely with the electricity play. Speaking of which, you know, key week as well. We're seeing this slight, almost like the start of, Julian, this rotation back into, you know, consumer discretionary.
That's right.
Right, from tech. Is this going to be a good time to rotate into those, you know, consumer names like your Walmarts, your Home Depots, your, you know, I know you have issues with Amazon.
Well, I do have slight issues with Amazon because I think they're doing something for defense. They announced yesterday they're now going to do home delivery of groceries. If you're a Prime member, you can now have delivery, same day delivery. Well, obviously, the market initially went, oh, that's good. And they took Amazon up a little bit yesterday. What they really did was they smashed the competitors. So Kroger went down a lot. The ones that really got hit were the delivery companies, which frankly is a business that I think is pretty rubbish anyway. You know, afraid to say. So Instacart, DoorDash, Uber, you know, Uber, obviously Uber's wider, got a bigger set, but so Instacart got the biggest hit. If Amazon's going to do home deliveries, that's going to cost them. It's not good for UPS either. It's not good for FedEx. It's going to be more of their delivery. So it's a big change. You know, these are my instant, because it was only announced yesterday. But Amazon seems to be losing share in the cloud business. It's not growing as fast as the others. Google, Microsoft all put up much better numbers this quarter than Amazon did.
It would
and
also,
Walmart's back in,
yes,
in retail. We'll get more from Walmart. You asked about this correction. We didn't get a correction because what we've had is the tech earnings. Tech earnings are great. Walmart will give us more of a clue about the consumer next week.
Fantastic. And just taking a look at Walmart as well to see whether there was a reaction after the Amazon news. The reason why I'm interested is because when I'm in the States, I do take time to go to all these places. I never buy anything. I'm just stood there watching. I know it sounds strange, right? Maybe trainers. Trainers are really cheap there. So I'm wearing a pair of trainers that I picked. I always pick up about 3 pairs because it's just so cheap there, right?
Yep.
Your Targets, your
Used to be. Getting better now. Our pound actually buys something now.
Well, it's more like the dollar is
well, the dollar's gone down, so now 135. It becomes a bit more.
Yeah, so I come back with minimum 3 pairs of trainers because it's cheap there. But you know what's interesting?
Walmart yesterday, that red bar.
Yeah, and that makes sense because Walmart. Have you heard about their premium delivery services? I can't imagine anything more horrific because there are more options than I thought possible. One is you pay an amount for them to put it well, bring it to your house. Then there's another more expensive option where they get some smart fob, so they put it in your garage or your garage, as they say there. Then there's an even more expensive option where they bring it into your house and they put it in your fridge or where you...
You know what's coming next.
There's one more, and I just thought, how lazy can you be, people? How lazy can you be? They arrange it on your worktop.
Oh.
And you know, if you can't tell them where to put it, they just lay it out so you know where everything is.
Very nice. Oh, they're going to deliver it. The next thing is, that's going to be a big business. I haven't worked out the exact play on it yet. Drones.
Ah, so they put it in your garden or just drop it.
The drone will arrive. You'll hover above. This could be in, you know, slightly rural America, where everyone has a yard or garden, whatever. So the thing won't go in your house, but it won't have to. But it will be able to leave it. It'll sort of come down. The drone will hover above the garden, and then it will just come down on like a little parachute, drop it down, and then you'll be there to take it. And if you're not there to take it, it'll just drop the thing outside.
Or if in San Francisco, someone would have stolen it within 2 seconds. It is really bad out there, really bad.
I haven't been there for a long time, but I hear it's not as good as it used to be. A lot of the shops in downtown had to close because there was just what they call shrink.
Yes.
You know about shrink, obviously.
Yeah.
Shrink, basically, people just walking in the store, walking off with it. Yeah, it's bad.
Right, so back to Walmart and how about Home Depot?
Home Depot is great. So Home Depot's it's a fantastic company, right? So you've just got to get the housing cycle. Now, the housing cycle, there are plenty of ways to go on housing cycle, but if rates are coming down, if you think rates are coming down, that's why they all moved. When the CPI number came out on Tuesday, all the housing-related stocks moved. I think I've got some better names than Home Depot, but, you know.
Yeah. This is exciting stuff because we have all sessions in about 8 minutes time, which I'm hoping you will join me for. All sessions is one of the best products here at IG, says myself, because you get to take a position ahead of the cash open. So at 9 o'clock, all the most liquid US stocks you can trade here on the IG platform. And what is also amazing is that, you know, if there are any names that you like, please call them out. Recently, we've been seeing a strong trend at around 9 when it opens. You get to ring a bell as well. We're hoping the LSE is going to sponsor our bell soon because we've just had sign off. So, Julian, it's a very special moment for you. Our trader friends know as well because tomorrow, after our last show in here, we've had about 255 shows. This whole place is going to be ripped out and vast expense has been signed off to make this all bright, shiny and new.
Right, so like Trump and Powell, you have to
Trump.
got someone come around to check on your refurb cost.
Yeah. So thank you very much to all our trader friends who have made that possible, because it's only because of your like and sharing, your great comments that have supported us, that have made this possible. In a time when there's cost cutting, we have money to...
Money, right.
Yeah. So any questions for Julian, please put them here and we'll get him to answer it with us on all sessions. We come right back.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades But also remember, your losses are also amplified, so be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Okay, guys, before I teach you how to use this, I have to teach you how to use this, the mind. The cash return wasn't all about speed, it wasn't always about power, it was about the mind. Become the bull. Visualize greatness. Okay, minds are ready. Time to go. Hey, come on, Pat, come on. Cash returns, come on. Oi! Oh, you're not going to get better than cash returns. The cash returns.
Hey, trader friends, and we are back, counting down to the all sessions opening bell with Julian Wheeler, who has kindly agreed to stay with us. We have a question from Blue Dash. Good morning, Blue Dash.
Good morning. What are your thoughts on Pepsi? Looks like it's turning right. I think I like the sector at this point more than I do Pepsi. But I think you're right. I mean, that looks a pretty good bottom. If you're a technical trader, looks a bit overbought short term, but looks like the bottom is in. The problem with Pepsi is that they've taken so much in pricing, they haven't reset like the rest of them, and Pepsi is an awful lot more expensive than, say, some of the other ones in that sector. If you're going to be in that food sector, I'd rather play Kraft, only because Kraft trades on about 9 times earnings now. I mean, 9 or 10 times earnings. Pepsi's still in the 20s. And that's because Kraft has been, it's been such a disaster. The reason is I think I've got a catalyst. Berkshire Hathaway is the largest shareholder. Berkshire Hathaway is fed up, and they are talking about restructuring, which means splitting this thing up. Kellogg did it very successfully just about a year and a half ago, split the company into 2 pieces, both of which have now been acquired. One by Mars and the other by another private equity group. So if Kraft were to break itself up, the other thing about Pepsi is it sells the stuff that is really bad for you.
Yes.
Salt and sugar, and you know, this isn't me.
Free-to-lay.
I know it's not me getting all moralistic, but the healthcare, R.F. Kennedy,
Yes.
and the whole movement, you know, soda, under what's called the SNAP payments, sort of, you know, like food stamps. They're going to ban soda and stuff from that. So that's a lot of that. Really, you know, that's bad for Coke and Pepsi, but particularly for Pepsi because it's more a bigger part of their business domestically.
I'm glad you brought that up as well, because you know, I am watching that like a hawk, because that will affect the GLP-1 space
absolutely.
as well. And trader friends, if you wonder what analysts look out for, because I am also an analyst, I look out for key words that crop up, and you can buy this data that crop up at presses and meetings with other analysts. And in the last 5 years, it's been GLP-1 and how this is also going to affect the likes of McDonald's, right? Your cigarettes, sin stocks. And there's something about GLP-1 that they don't understand quite yet, but early data shows that it curbs risk-taking. So take a look at that. Yes, I will send you the data. We have 5 seconds to the bell. I'm going to pass it to you. You're going to ring it. 2, ring it. Just knock it. Yep. There we are. And well done, Julian. His debut on the bell, which will be sponsored by the London Stock Exchange very soon. Let's have a look at all sessions and how that is shaking out for us. Right, we are taking a look at some of the gainers first whilst it's shaking out. Beyond Meat there. up 3.5%, but it's very volatile stock there.
There we go.
It's normally down usually. United Health is up 1.2%.
Okay.
Some of the crypto names there also bouncing back. The Mara Holdings, MicroStrategy is down 0.75% there. And we've got Upstart and Virgin also higher there. Any of those?
So you've got a lot of crypto stuff there. I don't know if cryptos, you know, you've got Coinbase, MicroStrategy.
I think Bitcoin recently touched a record.
Okay, so that would explain why they're up. Is there any? There's no news on any of those, is there?
No. Nova Nordisk, these are the ADRs up 8%. Now
That's probably following Lily's stronger day yesterday.
Yeah. Losers list now.
Losers, right?
Yeah. Best Buy down 2%.
Down 2%. Okay, I don't know if they're reporting.
We've also got Pinduoduo PDD, which is another retail stock, Chinese one, down around 8% there.
Yep.
Snowflake also down a bit.
Snowflake down a little bit. Snowflake is a great company in competition with something that I like called MongoDB.
Tell us more.
MongoDB is MongoDB had an incredible boom. It's basically a transactional database if you are, especially for a web-based application. So you can imagine during COVID and everything moved, it had this huge run. And the worry has been that it's had to go through a period of adjusting from the COVID-related boom in e-commerce, everything, to how are you relevant in AI? Well, it looks like their database is very relevant for an AI transactional database. Quite complex, but they will compete with Snowflake. The market thinks Snowflake and Databricks are going to just eat them alive. That's why the stocks come down. I think the market's got that wrong. If I'm right, that stock's going a lot higher.
Right. And
they put out one good quarter last time. You have to wait for something. Last quarter, they said they had the biggest new customer sign up in 6 years.
what's your you've already got a position in it?
Yes, and MongoDB.
What is your target?
Oh, back to the highs there, 350.
Nice. Now, this is not advice here. This is just opinion. We've got Pelican. Good morning, Mo. Welcome. I know you like momentum plays. Pelican asking whether you can talk about Robin Hood.
Robin Hood. I mean, Robin Hood is, it's a play on the market, right? I mean, the better the stock market, the more volatility, the more action in the stock market, the better for Robin Hood. Is there long-term, are they able to hang on to their valuation leadership? Questionable. But again, it's a momentum stock. You know, that's not a chart I'm shorting. You know, who says you're wrong? And I'm never a seller on valuation. It's not a reason to sell. I want a reason to sell. Because how do I know what's expensive? This was the thing that I was going on about earlier about saying why why the market's not coming down. 91% of investors, according to the Bank of America poll day before yesterday, say the US is overvalued. What that means is they're out, they're gnashing their teeth because it's going up and they're not on board.
They're in their bear caves crying.
They are in their bear caves crying. Yes.
Let's have a look at this as well, because from a technical viewpoint, it is, as Julian says, all above the moving averages. Let's also have a check-in on the RSI there for you, if we may. And for those of you trader friends that use this often, all you have to do, or if you're not au fait with this, just go to the indicators there. And if you go right down, you'll find it on the left-hand side, RSI there. And it's not looking overbought by any stretch at the moment.
I mean, I would say, look, if you're a trader and you've been long that, very well done. And you can see how it hugs that moving average every time it comes back to it. What is that, 50-day? Oh, looks like it, that one. I mean, roughly 50-day or 20-day. The one up close to it.
Up close to it, that is the 20-day.
20-day. Okay, so that's 1 month of trading. So clearly, there are people watching that. They're buying it every time it gets there. So you're right there now. But you can see what happens if it breaks it. If you go back over on the left there, if it breaks it, there, then you start a correction.
Let's go to the left, because technicians always say, let's to the left, let's move to the left.
Well, that was it. That's a classic when that came public. You know, the market went into a funk, but we're back in. I think they've got, they do crypto as well, don't they? So they're part of the whole crypto space.
They
so
do.
the Genius Act, which has allowed that as another benefit to them as well.
Yes.
So all these trading platforms have done incredibly well.
They also have an app that has the colors of Tron.
That's important. And those colors are?
I'm only saying that because I do have astigmatism, so the colors just work with my slight astigmatism. That's why I've got yellow lines, because to me, yellow lines are clear.
My father was colorblind, and yellow was his favorite color.
Oh, I'm not colorblind, but if I have other colors that are not yellow, sometimes with the wrong lighting, I get a doubling or tripling.
Ah.
Yes. So everyone gets really excited when they see a nightclub with all the wonderful light that comes from underneath the cocktail bar.
Right.
I'll see 5 Julians.
Okay, that's probably 5 times trouble, isn't it? Yeah.
5 times trouble. There you go, Mo. Good on you. You've been in Robin Hood and for some time, I believe. Also, Pelican asking about MP materials.
MP materials. I don't know MP. Is this a mining stock, is it?
Let's
MP?
Maybe there was something out today. MP materials. It is all sessions, up 0.2%. Let's have a look at that. MP materials. Yes, it's a miner. It's a rare earth.
Rare earth.
Miner.
Oh, yes, MP material, right.
Market cap of around 13 billion.
13 billion. Right, so it's rare earth. Obviously, the whole deal with China, however this pans out, the belief is at the moment, you notice that Trump has basically said, have another 90 days, sort of to come around to my way of thinking. And they're probably saying, no, you have another 90 days to come around to our way of thinking. It would appear that China has enough of a strong hand here with the rare earths. So if MP is the US domestic player, then rare earth concentrate production jumps 45%. Well, that's that's not bad.
Yeah, that was beginning of August. But bear in mind as well, there is a lot of, I'm just going to try and zoom out to get you the chart there. There are huge numbers of yet undiscovered deposits. They're trying to find all these deposits in places like Indonesia. So I would say keep an eye. I don't really trade the space because I just think it's, keep to what you know. But if you do invest in the space, keep an eye on what they say about production in places like Indonesia. Obviously, places like Alaska and places like if you are interested in this place, I highly recommend in this play, you go to the Greenland Investment Summits, which happen near Green Park every year.
Obviously. Yeah.
Of course, in London. Where else would it be? Huge liquidity pools here. But also the Mongolian Investment Summit.
Okay, I mean, there's no way I'd buy that stock there.
Yeah.
Just because it's screamingly overbought, miles away from its moving average. I think somebody's got there before you.
Yes. The party's already
well, the party's, you are arriving when most people are 5 cocktails down the road. So
seeing 5 Julians.
Yeah, exactly. So I reckon at best or at worst you'll be able to buy the stock at the same price in about 6 months' time.
There you go. No, there you go. You heard it here first. MP Apple invest 200 million and defense 400 million. Fantastic. Thank you very much. I hope all of you trader friends really enjoyed that. Do hit the like and subscribe button, especially to get Julian back with us. And we're going to have man or woman or Ange versus machine coming up next. So do stay tuned for that.
In the last video, we talked about earnings per share, or EPS, using pizza slices to explain how much of a company's earnings you, as a shareholder, would get for each slice, or share, that you own. But today, we're taking it one step further, and we're using EPS to calculate the PE ratio. And this will help you understand what a share price actually represents. The PE ratio stands for price to earnings ratio, and it's one of the most widely used tools to measure a company's valuation. But what do I mean by that? Valuation is essentially the price you pay for something compared to what you get in return. Is it worth it? Whether you're buying a car or a house or shares in a company, valuation helps you decide if the price you are paying is fair. Now, In the stock market, what you're getting is a share of the company's profits. The PE ratio tells us how much investors are willing to pay today for those earnings. But why is this so important? Because it helps us compare companies and decide whether an investment looks cheap or expensive relative to others. Now, let's take a British construction company, for example. Imagine this one block is the company's EPS, and that is £1 per share. When you're buying a share, you're buying into the future profits of that company. But to avoid overpaying, you need to know how expensive the price is. Now, too many people jump in to buy a stock just because they love the company, without paying attention to the price they're actually paying. And it might sound crazy, but a share price alone doesn't tell you how expensive a stock is. The valuation does. Now, this is the important part to get. If the EPS is £1, then how many blocks of earnings am I willing to pay for a share? What's the right price? Is it 12 times or £13? Or if our construction company's PE ratio is 14, that means investors are paying 14 times the current earnings to buy a share in the company. So the share price is simply 14 times or 14 blocks built on top of each other. Now, why have I chosen 14 times? Well, that is actually the price of the FTSE 100. Adding all the profits together of the top 100 British companies and then dividing them by the number of shares, we can say the FTSE 100 is trading on a PE ratio of around 14 times 2024 earnings. Now that looks fairly cheap relative to its own historic PE of 16 times. Now the PE ratio can be seen as a snapshot of investor confidence. A lower PE ratio might suggest that investors think the company and their profits aren't growing very fast, while a higher PE ratio often means investors are expecting big things in the future. Now let's compare our British construction company, or the FTSE 100, to the S&P 500, which tracks the 500 largest companies in the US. Now its PE ratio is currently 24 times earnings. And that means investors are paying 24 times this year's earnings per share in the S&P 500. And you can see the difference right here in that valuation. That's very expensive relative to its own historic value of only 18 times earnings. But here's the big question. Why is the S&P 500 trading so much more expensive than the FTSE 100? Is it overpriced? Or are there other factors at play? Well, that's what we'll explore in the next video when we look at something crucial, the earnings growth.
Hey, trader friends, and we are back with man or woman versus machine. Where is AA Ron?
Where is AA Ron?
Yes.
That's a good question.
We are here because AA Ron, or I'm here because AA Ron is he on holiday?
He's on holiday.
Fantastic.
How dare he, right?
How dare he? My goodness me. But I'm very excited because I want to test this out. Let's Ange test this, right? Take us through what we know so far about this portfolio? I know it's week on week. The man seems to be winning.
Yeah.
Versus machine.
Right. So that's where we are. So
Yeah.
we're now in effectively 3 weeks. This is, I guess, episode 4 of the humans versus the robots, man versus machine. So very quick intro into what we're doing here. We have got 2 humans up against a multi-billion-dollar ChatGPT system in who can invest the best.
Yeah.
All right. So we're asking the age-old question: is can a human start to just actually hand off all of their portfolio making decisions to
an AI?
To the AI. Really simple rules, basic ground rules. Every week we just ask ChatGPT 2 prompts. Right? We've got them up on the screen. The first one is we ask ChatGPT to give us some market analysis, and we use the same prompt. We say provide a comprehensive rundown of current market conditions for a UK investor. So we try and keep it really simple. It gives us some bullet points.
Yeah.
The second prompt is then, all right, based on this, what do you recommend you change in the portfolio? So in week 1, we built the first portfolio. It came up with a foundational portfolio. Now, every subsequent week, what we do is based on the market analysis, do you want to make any changes? And then we take that AI portfolio and we change it, but we in the initial phase, in the foundation phase, built our own portfolio as a response to see if we could enhance it. The only constraints that we have are that portfolio is long only, there's no leverage. We put maximum 50% into one ETF and 20% into a single stock, and we're trying to consider some realistic investor behavior. We've got a benchmark, which is 80% MSCI World plus 20% cash, to try and give us a balanced growth portfolio benchmark that reflects the kind of risk that we're taking. And that's where we are. And this is just, the usual disclaimers. This is for educational purposes only.
This is not advice, trader friends. This is for educational purposes. I love this. So, love a competition.
Yeah.
So, give me the duration. Ange is always about duration. Give me the duration. Is it from this point to next week, this point? Is that how it works?
Exactly. So we're going week on week because that's how long-term investing is done.
Bring it.
You try and do long-term on a weekly basis. I mean, really, yeah, this is just showbiz. We're just trying to fit it into the weekly schedule. So what I do have is I've got the 2 portfolios up on the screen, and this is the difference between the 2. So we've got the human allocation on the left, we've got the AI portfolio on the right. Very different, but both offering balanced portfolios. I was really surprised. The initial portfolio offered by ChatGPT, very well balanced. Subsequent to that, it's made lots of changes. Almost every week, it wants to snap at its winners. And what it's done is we've added in, most recently, we've added in a FTSE mid-cap position, 2%. And we've also added to the UK dividend ETF, whilst at the same time selling off a bit of Lockheed Martin and selling off a bit of the short-term duration bonds. Human portfolio, no changes so far. So that's where the portfolios are.
So first glance, there's a lot more ETF action in the human allocation compared to the AI allocation.
Absolutely. So more single stocks in the AI allocation. For the humans, we wanted to try and capture broad-based themes. So I mean, a big example there is that both AI and humans went for a defense allocation. AI picking 2 single stocks in BAE Systems and Lockheed Martin, whereas we just took a VanEck defense ETF, which is tilted a bit towards the US, probably not as much as I'd liked, because I wanted to take a US defense position based on where the Big Beautiful Bill was going. And subsequent to the Big Beautiful Bill, we had the EU tariffs, whereby they are now going to be buying hundreds of $1 billion worth of American defense to shore up their defense system. So that's really where the differences are.
I'm curious as well, because looking at the AI allocation, did the AI know that the Alaska summit was happening this Friday?
I don't think the AI knew that. It never came up in the chat.
So this was done before the Friday.
This was done before. So the changes that we made were for Thursday last week. We did ask it what it wanted to do. No point did it mention the Alaska summit. So that has been one of the key drivers in that defense space. So what we'll do is we'll also have a look and see how the performance has been going. So here we are. This is how we are going to date with the performance. Human portfolio in the green.
Nice.
AI portfolio in red, both positive, and benchmark in white. And benchmark slightly flat at the moment, really just above 0.02% up. AI up 0.07%, and the humans up I'm going to round up, say 0.45%.
And just to clarify for my trader friends, tell us what the benchmark is again.
Benchmark is 80% MSCI World ETF. It's a equal weight and 20% cash, and we've used a ultra short bond.
Nice. Great.
And so, yeah, for the last week, what we've seen is that all portfolios have fallen slightly, but the human portfolio fell a bit less. So AI down almost 96 basis points, humans down 24 basis points, and the benchmark down around 45 basis points.
Can I give the human portfolio some Ange tips for the coming week?
Absolutely. I think let's do that. Let's first see what ChatGPT has to say about their portfolio.
Okay.
So I think we've now got we've gotten this kind of poor performance over the last week. I want to know from ChatGPT how they think their performance was compared to the human portfolio.
Out of the 10 holdings in the AI portfolio, only 3 saw gains, and the rest were in the red. And with BAE Systems down a hefty 7% and Lockheed Martin dropping over 2.5%, that's a pretty significant drag. Even though the overall weekly performance was only -0.33%, the underlying components clearly show weakness. That kind of concentration in underperforming sectors, especially defense, really exposed some vulnerabilities.
Absolutely. I think I said it last week, ChatGPT's responses are getting better, and not only is it going to try and take over the portfolio management, but it's going to take over the show.
I have an issue with the voice, because it should be an it voice. It shouldn't be a woman's voice. And the reason for this is because I have stress tested the world's first humanoid that was given.
How did you stress test the world's first humanoid?
I was put in a pod in Davos to talk to Sylvia, who is the first ever robot. I can't say it's a person, robot, but it looks like a person. And in the pod, you're meant to ask it questions. Obviously, they've built it to look like a woman.
Okay.
And obviously, Saudi Arabia gave this it woman nationality. I mean, of course, they're probably going to let it drive as well, right? Given Saudi Arabia's track record. But it could not get, at that time, in Davos, so each dignitary was allowed, a minute with Sylvie. You can find it. It had a female voice.
Okay.
It couldn't get my most simple favorite cracker joke.
Didn't get it.
Didn't get it. Didn't laugh. Could not get that at all. So that is why I say we stress test it. The joke was, what did the fish say when it hit a wall? What did the fish say when it hit a wall, trader friends? Damn.
There we go.
And it did not get it. It was like, did not compute, right? So
computer says no.
This is why we need to have a look. So I know it's getting better, but I think you're not going to have a robot
Do you think it would be better if it has a robot voice?
Yes, and also my thing is, a robot can look at seasonality, but a robot can't deal with sudden Trump announcements, sudden tweets, Putin doing something out of the ordinary.
Yeah, absolutely.
You still need a human.
I think that's one of the things is that
Hey, don't talk yourself out of a job.
Ooh, well, one of the things with ChatGPT, what we've seen so far, is that obviously all of these systems are built on training models, and if they haven't dealt with a scenario before, and I'm sure there must be some advanced AI that is naturally thinking, but if they aren't able to almost fit an example to it, they don't know how to react. And so, yeah, Trump coming in, they haven't dealt with a second-term Trump presidency before, and tariff man. Yeah, there you go.
Julian Wheeler, you heard it here first, trader friends from Shark Capital as well, in earlier saying that he doesn't think that the algos have got it right, or humans either, because this summer correction everyone's been talking about, in his view, in his opinion, that happened in April, where, you know, we had that huge tariff tantrum. So seasonality for this year, in his view, is out the window.
Seasonality out the window, and why does he feel that?
Because he says that we don't normally get that sort of correction in April.
Fine.
So the steam has already been taken out of the market.
I think that there was, if you look at any of the analysis, there was always meant to be a weaker kind of first 3 quarters of the year, and then we were going to expect a strong finish to the year and a strong 2026 based on the election cycle. There was always meant to be Trump front-loading a kind of clear out, softening the markets in order to let them ramp up into the election so that they could try and secure a victory. I think the scale of the tariff shock was so large that the response had to be so urgent, and we've almost now seen all of that kind of front-loading of increased returns and this risk-on sentiment really truncated into a small space of time. It is going to, I think what we're expecting is a lot more volatility now than probably what we were expecting in the beginning of this year.
Right, let's take Martin's screen, if we may, as well. Let's have a look at the performance drivers, human versus machine.
All right, so AI portfolio, it's been a bad week. Lots of exposure to Lockheed Martin and BAE Systems. BAE Systems coming down 7%. This is on the news of ceasefire talks, Trump now getting involved. And at the same time, you've got a larger weakness towards UK and European defense spending compared to the United States. And so that's why you're not seeing Lockheed down as much. On the same breath, if you take a look at human portfolio, that was also our weakest position, was that thematic defense ETF. But defense ETF down just under 2%, whereas BAE Systems 7%, Lockheed Martin 2.5%. So we were able to mitigate some of those losses by having a diversified basket of defense spending. Gold as well, being one of the losers for both of our portfolios, down 1.83% over the last week. And again, this is on sort of subdued geopolitical risk. This is on the talks of ceasefire. But at the same time, there is a bit of support coming for gold now because we're seeing real yields coming down. So real yields coming down, that's supportive for gold. Doesn't mean that your storage price is so high. So that starts to make gold somewhat attractive. So maybe gold slightly buffered in the last week because of those real yields coming down. But then the big winners, NASDAQ and Shell. No real winners in the AI portfolio. They've got a bit of exposure there to MSCI World, getting some of that, that kind of rotation now into energy, and the really supportive market we've had in technology stocks over the last week with earnings coming out.
Right. Shall I give the human portfolio a bit of...
This is your chance.
Ange edge.
Yeah.
Okay, here is the Ange edge for you. The gold. Gold is stuck right now, stuck as in the mud. Let's have a look at gold prices for you. And everyone I speak to in the defense space or has a position in defense, everyone is in agreement that basically this coming Friday, it's just going to be a let's feel the mood summit, right? Let's feel the mood, but nothing essentially changes in that front. So what's going to happen is everyone's going to say, we're going to agree to keep talking to the second time. They'll come out saying nothing much has been achieved, but we're going to keep talking. Taking a look at gold, what all that means is it's going to be stuck in a rut in that channel that we've seen it in since the beginning of around May. So if you wanted to replace that with something else, then I would say look at the consumer cyclicals. Look at the Walmarts. Look at the, we already saw some of the cyclical change overnight. If you guys were trading the US US close, from the techs into the names like Walmart and the potentially even the Home Depots. There could be a bit of a bounce in the coming week. Another one is, everyone knows that I like energy and I'm big in AI, but have you looked at gaming? Any trader friends, you guys, gamers? Any gamers out there? Do you play computer games?
I don't play that many computer games, but I mean, I was a child quite recently, and
5 years ago.
And I remember playing a lot of computer games then.
Taking a look at Espo. You familiar with Espo?
No.
So if you type Espo, you'll see lots of ETFs there in terms of video gaming and esports as well. Esports, of course, a growing space there. We just recently had esports Formula 1 over here in London a few weeks ago. But look at the Vector's video gaming and esports ETF. If it has started ticking higher there, and also look at the ramp up. There you go. And no matter which way I cut it, let's take a look out from the daily to the weekly, trader friends. You can see a strong upward trend there. And even in the summer, that has tracked higher. And the reason why I'm showing you this is part and parcel of that growing trend of people not just investing and trading online, but also if you have tasted and been in the US recently, you'll know that video gaming is now blurring with the FanDuels, with the sort of board games online / betting.
Yes, that was what I was going to ask you about, is that I need to have a look at this ETF and see what it comprises of. If it contains some of like the big winners, which has been still referred to as online gaming, but it's actually just online casino games. And companies like Aristocrat have been really successful. The kind of profitability is almost obscene. So yeah.
And don't forget, they're not buying any raw materials, they're not selling anything, right? And so they're also buffered from, the whole kind of like tariff tantrum that you could see out there. Also, your Crane Shares ETF, the China one. I understand your ploy, the reason why you've put that in your portfolio, but you're going to have to keep waiting for that China dream to come, because it's going to take a while. Lots of people have been waiting since August.
For 10 years for the China dream.
And everyone that has got a position or is thinking of a position, then they're watching the property market, the Chinese property market. Back in October, you heard me, in November, you heard me teasing China Franc, so China Franc Cabana, because you kept on going, come on, at some point, right? At some point. And then we had that China Tuesday, but that huge continuous bazooka did not come, trader friends. It was just one and done. And so that is why I'm saying, if you wanted to swap out to give the human side a bit of an edge, then maybe
we might listen to you there. But I think so. China, what I will say there is that the consumer's looking a little bit healthier. They're actually a bit subdued on their credit spending. So the overall debt levels have come down, both in the corporate and in the sort of civilian sector, we'll say. Property not looking too bad anymore. When it's the risk that I had sort of attributed to property seems to have really abated. So I think that the tariffs have been the major drawback, and also there hasn't been a cut in the Chinese central bank rates. So there was an expectation for a cut. And that hasn't come to fruition, and they seem quite hawkish at the moment. So that hasn't really put a bit of sort of fuel in that Chinese sort of market. But we're going to keep it there for now, I think. What I do want to do is bring us onto the first part of our portfolio for next week. And the prompt that we ask ChatGPT is to provide that comprehensive rundown of current market conditions for UK investors. And this is what it's delivered. 3 key areas. One, looking at the UK equity market. The second being some sector highlights. And the third being global macro drivers. What I want to pull out from this is that it really thinks that UK market is the place to be.
Interesting.
0.3% higher. It's looking at healthcare, and it brings healthcare up a few times. So it's definitely picking up on a healthcare trend. healthcare has been probably one of the weakest markets in the last sort of 2 months. You can see the sector highlights. It is looking at healthcare and consumer strength, investor enthusiasm in healthcare. So I can already see what I think it wants to do. And defense weakness. So it sees healthcare strength and defense weakness. Defense has been probably the best performing sector, healthcare the worst performing sector, but it's looking at defense weakness and healthcare strength in the last week, and it's going to make a decision based on that. I think let's ask ChatGPT, instead of reading through this, ChatGPT, given the poor performance that you had last week, what are you going to do for next week in order to rebalance some of the portfolio? And
Based on last week's performance and the macro outlook for the week ahead, first, I'll trim some of the defense exposure, particularly BAE Systems, which was down sharply last week. With markets reacting to the possibility of a Russia-Ukraine ceasefire, the short-term outlook for defense stocks looks shaky. Next, I'll increase exposure to more defensive income-generating assets, likely by adding to the iShares UK dividend ETF or introducing more into the short-duration bonds. That should help stabilize the portfolio in case volatility picks up again. I'm also watching the UK labour data and PMI numbers, which could shift sentiment around Bank of England policy. If the data comes in weak, we might see more rate cut talk, which would support bond proxies, dividend stocks, bullet, and even gold. So I'll consider increasing gold slightly as a macro hedge. Finally, I'm holding on to my global equity core positions like MSCI World and EM for long-term balance, but keeping a close eye on US CPI and retail data later in the week. If inflation surprises to the upside, I'll need to reassess risk levels quickly. So in short, less defense, more defensive.
there we go. Straight from the robot's mouth.
What was the last bit? Less defense, more...
Less defensive.
Yeah. I agree with the consumers. The consumer, I think that it's time for the slightly unloved consumer discretionary to come back into the limelight again.
Yeah. So one of the things that we did is when we feed the portfolio back to ChatGPT and we ask for the suggestions. So we've just had some commentary on suggestions. When we feed it back and we then ask for the rebalance, this is what it came up with. So it has actually drastically changed the portfolio. So clean energy didn't have a great week. So what it wants to do is completely remove clean energy and replace the entire position of clean energy with a new position in global infrastructure. And then healthcare, I mentioned that in the chat. It's definitely picking up that healthcare is now the sector. Now, I'm happy for it to actually take this investment. Healthcare has been really run down this year. I'm feeling like this is potentially too early. I like the healthcare space, but based on Trump's big, beautiful bill, which has really cut fiscal spending towards things like Medicaid, as well as his pressure on the pharmaceutical sector to reduce drug prices. And he's got this new policy that he's brought in with regards to matching the lowest or the highest price overseas, ensuring that Americans don't pay more than any other market. Healthcare is potentially not yet at the bottom, but I'm happy for it to take that and we can try and see how healthcare performs. So I think that's an early pick into healthcare. And then cutting next era energy, 10% down to 8%, and actually reducing cash position in order to finance those other positions in healthcare and global infrastructure.
I like the fact that there's a suggestion as to how much to add or cut the position as well.
Yeah, absolutely. And the rationale, so wants to reduce cash position to deploy the cash more productively. So cash has been, flat for the last few weeks, really adding just a bit of a buffer to the portfolio. It's now taking that position off, starting to wean off of its cash position. It's getting more exposure to volatility. This could pay off if we have a strong week. But at the same time, this is where that divergence is coming between our two portfolios.
Interesting. I like the diversification into healthcare as well. That it has talked about there because that is part of my diversification play. So I'm going to put up my watch list there, and I've got Eli Lilly, I've got AstraZeneca, and GlaxoSmithKline as well. I will also be looking at Viking Therapeutics after speaking to Julian Wheeler earlier on from Shard Capital, because you're saying that Viking Therapeutics is a small pharma that has got this oral skinny pill that is looking very promising, but because of its size, it's also looking like a takeover target from the likes of AstraZeneca and GlaxoSmithKline.
Got you.
Right. Interesting stuff. I am so pleased that Aaron is away, so it gave me a chance to. I found this very useful. Let us know if you found this very useful, trader friends, and please hit the like and subscribe button so we can pit Ange against machine more often. Martin, always such a pleasure.
Yeah, thank you for having me. And I hope Aaron is off researching more stocks for us to buy.
What, on the beach?
I don't think he's on the beach. I think he's gone to Edinburgh Fringe.
Oh, yes, that's right, for a spot of comedy. And speaking of machine and AI and everything tech-orientated, there is one other sector where you can also get some exposure to alternative diversification, some market watchers say. We have the 5th and final episode of my Decoding Crypto with Ryan Grace, head of Tasty Crypto, up next. And it's going to tell you all about why you should care, even if you're not in it, why you should care, how this space is developing, why crypto is in the headlines, and how it might be used in the future. Stay tuned for that next. Hey, trader friends, welcome back to the latest in Decoding Crypto. And in this series, we're going to talk about the future of crypto with Tasty Crypto's Ryan Grace, all the way from Chicago. Hey, Ryan, how's it going?
Hey, Ange, I'm doing well. It's great to be back. Thanks for having me.
You know, lots has changed in this world of crypto. It's very fast moving as we know it. Let's just talk about, you know, the future of crypto first. Give us a brief overview.
Yeah, I think when you talk about the future of crypto, really what you're talking about is a convergence of two systems, the existing financial system and blockchain technology. A lot of efficiencies that can be gained from blockchain that you'll see start to be adopted by the financial system at large. What we're seeing today is the tokenization of real-world assets, and that's assets such as currencies. The US dollar is one of the largest real-world assets that's been tokenized. You're seeing credit instruments, treasury bonds, debt instruments are being tokenized. And now you're starting to see a real movement behind tokenized securities. And really what we're talking about is just using a blockchain as a settlement layer. It's a little bit faster, a little bit cheaper, less friction, more transparent, and that's the convergence of these two systems.
Now, how does this moving of assets, right, due to tokenization, as you say, a little bit faster, a little bit cheaper, how does this all impact, you know, sectors like real estate, art, for example, carbon credits, equities, and accessibility for investors?
Yeah, I think that's the key word. It makes some of these assets a little bit more accessible and in many ways more liquid than they are today. When you think about real estate, it's slow moving in terms of transactions. It takes a little while. It's not very liquid. When you think about the art market, fine art, the high end, it's also not very liquid, and it's really not that accessible. You have to be uber rich, ultra wealthy in many cases. I think when you look at tokenizing some of these assets, or in a way kind of securitizing them through tokens, it makes them more accessible. People can participate in the appreciation. There's still a lot of constraints. It's not kind of as seamless as you might think with just trading tokens, but it does create an opportunity. I think that's still a ways away in terms of its importance or its adoption. And really what you're seeing more so is the tokenization of financial assets. So things that sit in centralized databases and have a bit more friction in terms of the settlement process, that becomes a lot faster and it becomes a lot more accessible on a global basis. Tokenized equities are really not that important for US investors because most US investors have access to US companies via regulated brokerage accounts. But globally, it makes some of these companies and the ability to participate in these markets much more accessible when it's tokenized, when it's on a blockchain.
Are there, you talk about regulation, are there concerns that, regulatory clarity and compliance might not be moving at the same speed? And how is this going to affect the adoption of tokenized assets across different jurisdictions?
Yeah, I think the regulation is always going to follow, in some cases, the technological innovation. You see that here in the US. Regulators are just today kind of catching up with a lot of things that have existed globally. And when you look outside the US, in Europe, in Asia, you have arguably regulations that are a little bit farther along. You might not love those regulations, but there is a framework versus here in the US where I am, that's still in development. I think it does act as a headwind in some cases in terms of participation by investors in various regions. A good example of that is the ability for investors outside of the US to access perpetual futures markets. Perpetual futures are a great product. I think they're very innovative, and I think in some ways they're an evolution of your traditional standardized futures contract, but they're not available to US investors. So what you see is many of these companies that are looking to participate in this space and to adopt this technology, they're having to go outside of the US first because you lack a regulatory framework in the largest financial market in the world.
Lots of people are asking after watching our interviews, hey, Ange, what is AI's role in this? How is AI and blockchain converging? And I said I would ask you.
Yeah, absolutely. I think there's a couple ways to approach this question as well. I mean, high level, if you believe that you're going to continue to see the proliferation of AI and you're going to see the growth of the Internet of Things and this connected world, all of these machines, all these computers are going to transact with one another using tokens, using blockchains. When you think about micropayments for digital services or for simply processing code or transacting through smart contracts, that payment is going to occur in cryptocurrency. On a blockchain, there's going to be a record of transaction that's on this distributed ledger. It won't be that this version of the AI has opened up a KYC bank account with name your favorite global financial institution. So it'll very likely use this technology when you think about it at surface level. The other interesting thing that you're starting to see is distributed compute and the growth of blockchain networks, or these networks that facilitate these processes. There are networks that are tokenized and create tokenomics, or an economy, an economic incentive around participation, but the networks themselves facilitate compute power for rendering graphics, for 3D animation, for AI-generated videos or images. You have the BitTensor network, which is being leveraged to offer a bunch of different subnets that provide competitive marketplaces for today AI services. That could be LLMs, it could be training data, and the rest of the kind of spectrum. And so I think that's going to continue to support the development of AI. When you look at distributed compute and you look at the blockchain network, the aggregate compute power is greater than any of the supercomputers that exist here on Earth today when you look at that network's power in aggregate. And so I think you're going to see just decentralized compute is going to really fuel the development of AI when you think about the convergence of blockchain and AI.
And do you think we are far off from, scalability to the point where this is all sustainable? Lots of, critics out there say, well, this isn't sustainable because of, issues to do with energy or issues to do with, sustainability due to regulation. Or do you think that we are at the point now, the tipping point, where crypto is now seen as infrastructure, right? And what kind of sectors will this impact?
Yeah, it's going to impact all sectors at the end of the day. I think where you're seeing it first and foremost is in the financial sector and the financialization that we've kind of come to know and love, I suppose, is really adopting this technology because of the efficiencies, again, that are gained. But I think that it touches all industries at the end of the day. when you think about the efficiency that you get from kind of decentralized databases in some cases. It's not going to be perfect for all use cases, but I think it touches most industries, especially when you think about, again, the growth of AI. And I think that it's absolutely sustainable and scalable on one hand, and it's a little bit of a legacy argument in some ways when you think about Bitcoin mining and proof of work. It is obviously energy intensive. But at the same time, that's what makes Bitcoin a store of value. It is proof of work. There are only 21 million coins that'll ever be mined. And so you see that kind of digital gold side of it, right? There is that ultimately requirement that makes that special. On the other hand, when you think about scaling solutions for Ethereum, or you think about Ethereum itself or other smart contract chains, these all use proof of stake. And I think that you're going to see that technology evolve as well. So there's no real argument around energy use when you look at most chains and most of this technology outside Bitcoin. And even then, when you get outside of blockchain and you start to think about AI and all these data centers that are being built around the world, they're absolutely going to require more and more energy. But that energy is likely to come from small-scale nuclear reactors and the evolution of how we power the grid. Maybe it will be solar, maybe it will be wind, and there will certainly be some fossil fuel still that's involved in that over the next few decades. But I don't think that that prevents this from growing or scaling, and I think you're watching it happen today.
Right, thank you very much for that. And for all you viewers, if you have any questions for Tasty Crypto's Ryan Grace, do send it to us on ask@ig.com and I'll get it personally sent to him. Ryan, as ever, a pleasure. Thank you so much for being with us and hosting Decoding Crypto with me.